Man, markets are down big. But wouldn't it be great if there was a way to know this was going to happen beforehand? Well, there is a way. Let's talk about it. Well, today we've just got another red day here so far. Looks like a tiny little rally is working. We'll see how far that goes on the short-term picture. But what I really wanted to talk to you about was what's going on in the S&P right now. So if we look at this decline around February 19th, we topped out. We've moved down quite aggressively here. And if we zoom out, you can kind of put that decline into perspective. I mean, this is the largest, most aggressive decline we've had since the market bottomed back here in November 2022. So we've been going up for quite a while. And now it looks like there's just been a major move to the downside. So wouldn't it be nice if you had a warning right up here before this ever happened? Well, it just turns out that I've been working for over a decade on a research and development project, a sophisticated constraint solver that does Elliott wave fractal analysis. And I want to show you what subscribers to my service saw before this ever happened. So let's go directly to the eWaves live interface. Okay, this is the S&P 500 index, and this is what the subscribers saw on February 24th. So February 24th, we go back to the chart I was just on. That is pretty much almost smack on the highest point here in the S&P. Now, as you can see, we've been trending up for quite a while, but from an Elliott wave point of view, we have a fractal pattern here. 1, 2, 3, 4, 5 complete. And you can see what makes it a fractal is that those 5 waves repeat within the subsection. So 1, 2, 3, 4, 5 in there. 1, 2, 3, 4, 5 inside of this move. 1, 2, 3, 4, 5 here. This is what's called a triangle. So you have A, B, C, D, E, kind of a sideways moves. So if you haven't done Elliott waves before, generally speaking, when you're going with the trend, you use numbers. And when you're going against the trend, you use letters. That's why these counter trend moves are A, B, C here, A, B, C. Or a sideways counter trend move is A, B, C, D, E. eWaves, my software was telling you that this entire move from October 2022 was over at this point where this green 5 is and this blue 1 is. Okay, it's saying this entire impulse structure is done, which means the correction is going to be larger than any of the corrections we've seen thus far. What's nice about treating the market as an Elliott wave fractal is that there is no period parameter required. Okay, you don't have to say this number of days, that number of price bars or anything like that, because what we're really measuring here in this system are relative movements. Okay, so for example, this decline here, this is a wave 2 and it retraces wave 1. Okay, so you can form wave relationships between everything here. So the ability to do technical analysis using relationships rather than fixed quantities automatically gives you a system that is scale invariant and gives you an idea of where the market is in more of a qualitative way as opposed to a quantitative way, which is why I call my company Qualitative Analytics. Now, the number of factors it actually considers behind the scenes, although I don't call them factors, I call them features, because that's how the mainstream AI community refers to these kinds of things, includes many different things. They're mostly proprietary, but I can talk about a few things. Some are obvious, like obviously 2 has to retrace 1. If you know your Elliott, you know 2 cannot completely retrace all of 1, only a proportion of that. And I have a huge statistical database understanding exactly how much of wave 1, 2 has a tendency to retrace, as well as, how the various probabilities play out for smaller retracements and larger. But that's just one simple relationship, and there's, of course, many here. Other things I like to look at are trend lines and trend channels. And in fact, I went ahead and drew a channel for the S&P 500 overlaid. Now, right now, we don't have this channel actually showing up in eWaves Live. I would love to actually show that drawn here on this chart. But that's something on my to-do list, so I'm going to add that soon. There are a lot of things coming on the to-do list and a lot of new features that are coming down the pipe. But let me just show you this real quick. Now, even though you don't actually see this on the chart, behind the scenes, the engine absolutely knows that this channel exists. It's measuring it, and this is one of the reasons why it preferred this interpretation of the fractal. So if you draw your trend line from 2, 4, draw a parallel line off of 1, you can see that pretty much hits 3 perfectly. This is what I'd call a highly channel adherent market. And in fact, channel adherence is one of the factors you can actually measure and search for in the eWaves Live portal if you want to find markets that have this kind of high channel adherence. But when you see that, it really does help you in order to understand that you are in an impulse, and the fact that this 3 hits the top, the 4 hits the bottom. That's exactly what you want to see to help confirm that you have the correct wave count. Now notice wave 5 did not hit the top. That's actually expected. Believe it or not, it's actually quite rare for it to burst above this. Sometimes it can, but this kind of sideways and weak price action here with this triangle is kind of actually what you want to see when something is terminating. And of course, now we're at 5.5 thousand, so we've broken below this quite firmly. Of course, we broke below it here, and we came right back above it. That happens, but that's why channels are not the end-all be-all. This is just one feature that eWaves looks at among many, many features to get the actual fractal labelings on here. But the labelings are ultimately what really matters. So you don't want to be a one-trick pony and only look at channel lines. You really just need that to be one of the many hundreds and hundreds of features that eWaves amalgamates in order to determine the preferred Elliott wave labeling. So let's go back to our main chart here. Now, in terms of taking advantage of a market like this that's in this situation, shorting is not for everyone. While the market moves down much faster than it goes up, there's inherent slippage in most vehicles like ETFs that people use for shorting. There's also an inherent mathematical disadvantage. The exception to that is if you're using options or futures where, more or less the long side and the short side are equivalent. But that's certainly not true in the stock market. But the cool thing is that, there's a bull market somewhere. There are other markets you can look at. While, of course, it's true that when the S&P is down, most stocks usually go down and vice versa, certainly not always the case, and you can find strength out there. So one market I was looking at was called Brown & Brown, BRO. And during the same time, February 24th, that exact same day the S&P topped, this also had moved up quite a bit higher, okay? And you would think, well, gee, if you didn't know anything about Elliott waves or this structure that I'm showing you, and all you knew was that BRO was up considerably, almost at a new high, on the exact same day that the S&P was making a very major high, you probably wouldn't buy this stock, okay? But again, you have to analyze every market independently. So BRO in its structure here is 1, 2, 3, 4, and we're not done with this fifth wave yet. Wave 5 needs to go above this peak here, and it hadn't done that quite yet. And in addition to that, we haven't even finished a purple 3. So we've got 1, 2, there's no 3, there's no 4 yet, there's no 5 yet. We're not done with this structure. Okay, so this was a stock I was particularly interested in. And if you notice, in spite of this massive decline here in the S&P, let's pull up BRO and see what it has been doing. Oh, and lo and behold. So there's our 1, 2 that I was showing you on that chart. This was about the point we were at, where it was February 14th. It's somewhere around here, actually. We just burst up to make a new high. We have a little corrective move up, moved up again since then. This is showing a remarkable amount of resilience relative to the S&P. This is just confirming the fact that the Elliott wave model is best used when you treat every market completely independently. So just focus on one market at a time. You don't have to worry about what another market is doing. So this whole intra-market analysis is really not the best way to leverage the wave principle, in my opinion. Now, the other thing I wanted to tell you is, why BRO? That just seems so kind of random just to pick a stock out of a hat here and show this to you. Everyone thinks about the S&P and watches the S&P all day. But in terms of individual stocks, there's a lot of them. Now, this particular eWaves package I'm looking at has about 519 stocks in it. And so in order to find BRO, I actually didn't manually do this. I actually used the wave finder. So what this does is, eWaves is doing fractal analysis like this on hundreds of markets for the individual investor packages, and we have institutional packages that are thousands of markets. So if you go over to the Wavefinder, this is a tool which is really the world's first Elliott Wave search engine. So it's going to allow you to specify some stuff which initially may seem fairly sophisticated, but once you get used to it, it's kind of like riding a bike. You will get accustomed to it, because what it's doing is it's letting you plug in information about the fractal that are requirements. You're saying, I want the fractal to be at this point, I want it to be doing this and not doing that, and it helps you to find the setups that you're interested in. So let's go ahead and turn that on really quick. And the setup I actually used to find this, you'll see that it's highlighted in blue, and there's this blue 5 and this directional arrow going up, okay? And we can actually zoom out for a second. You'll kind of see that this 5 actually comes off of an even larger structure, 3, 4, 5. Again, it's a fractal. So this, the type of analysis we do in the short term is the same as the intermediate, is the same as the large. It's all the same type of analysis. All right, so we're in 5. So this blue region here kind of is this wave that we're looking for in the Wavefinder. Now there's a lot of kind of criteria that I plugged in to find this wave. And I'll go through it with you real quick. So first, I wanted an impulse wave. Impulse waves are the ones which trend the most, okay? That's definitely the wave that you want to be trading if you're going to go with a trend. Now, the duration, this is how long this wave has been in progress thus far, between 100 days and 800 days. Why that? Well, you could pick a larger time frame if you're an investor, or a shorter time frame if you're a scalper. But for me, this is the time frame that I like. So, I was talking earlier about periods and parameters, and yes, E-Waves does not use parameters in terms of the analysis, but the parameters, however, are useful in picking out waves. Like, do you want this wave here, or do you want, a smaller wave like this purple 3 that's coming off of this 2? We could pick that if we change the duration to something smaller and take a look at that wave. So in that sense, yes, you do need to have some fixed parameters to find specific waves, but the overall fractal structure you're seeing here doesn't have any parameters at all. There's nothing to plug in. You're going to get the same wave count every single time, nothing to tweak, no numbers to fool with. The next parameter I was searching for is linearity. I wanted moves that were highly, highly persistent. Okay. In fact, we considered using the word persistent instead of linearity, because that's basically what this is measuring, is how effectively is the market continuing to persistently move in the direction of that wave. Okay. And so 80% means it's very, very persistent. There are not many markets that score this high in terms of how persistently they move. Now, the reason it's called linearity is because I like to be precise in my terms as opposed to vague. Persistence is kind of vague to me. It could mean different things. When I say the word persistence, it might not be that clear how it's even calculated. But linearity is actually closer to a mathematical term. The really precise term is fractal dimension, but linearity is a little simpler version of that. It's just basically saying, okay, if I draw a line like this blue line through the move, how far away does the price action get from that line? Does it stay close to the line? Does it get far away from it? So this is something that, you can kind of approximate what's going on in this market fairly well with a single line, okay? Whereas a market that's going up and down and up and down and up and down like this, you're not going to be able to draw a line as a good approximation. It's going to be more of a two-dimensional shape as opposed to a one-dimensional shape. So linearity, how close is it to a line? Pretty simple, but the closer it is to a line, the more persistent the market tends to be. So that's just a super useful indicator that I love to use to find strongly trending stocks. However, just because the stock is strongly trending, that's not all you need. As you can see here, if we go back to the S&P, this is actually a fairly strongly trending market. But of course, it just had a huge reversal. The ones that are up the most are the ones that are down the most, is something my old boss used to say at a startup hedge fund that I used to work at a long time ago. So you have to be careful of that. But that's why momentum or trends are not enough. You need to know about the fractal structure. So the great thing about E-Waves is, yes, you can use those trend indicators and they're going to help you find the big trends, but you also need to know if the trend is going to continue or if the trend is about to end And you're going to get something like what we just had in the S&P, where you get caught on the wrong side of the market. Okay? So think about it. The more a market trends strongly, the more people are going to be piled into that trend, and the more ammunition the market has for people to start selling. Okay? So you do have to be careful of that. So that's why linearity is very helpful, but you have to be careful with it. So in terms of being careful with linearity, that's why the last one on the list is so important, and that's Ellioticity. So what is Ellioticity? So this market I'm showing you has a very nice fractal pattern. The S&P had a fairly nice fractal pattern as well. So E-Waves measures how well this market adheres to an idealized version of what that fractal should look like, and then it gives you kind of a metric, a ranking, if you will, of how adherent that market is. So if this number is too low, then the program's not going to be able to really tell what's going on in terms of the fractal structure. There are some markets where it's just kind of gobbledygook, and you're like, okay, for whatever reason, this is not very adherent to the fractal, so let's just ignore it. So this is a thing I personally like, although you don't have to use it. There are lots of other ways to use the wave principle, but I really love fifth waves. So we've got 1, 2, 3, 4, and work in 5. And if you can jump on a fifth when it's forming, the advantage of that is because you've got a 1, 2, 3, 4 in place, you have most of this fractal structure done. But once you've got most of the structure here, especially if it's channeling well, the odds of that fifth wave completing go up dramatically. So let's actually flip over. I drew a channel on this one as well. And this is another one that just channels so well. It's kind of amazing when it hit 4 here, just smack on that line that's almost perfectly parallel to the 1, 3 line up here. And again, E-Waves measures that. It's one of the features that the engine looks at. And we're going up and probably going to continue up at some point, have a 4 and a 5. Again, I don't anticipate it'll hit the upper line, but it could, because it is kind of a very well-loved market at this time. And not just from the news, but also, from the price movement. Now, similarly, what I talked about, having a very nice impulse structure in place or nearly complete, that can be very useful when you're trying to go with the trend, but it can also be useful to have a nice 5-wave structure in place if you want to go against the trend, which is what we had recently in the S&P. So E-Waves lets you do whatever you want. This is not a black box system. This is a glass box program. This lets you see what it's thinking, and you have to use your own judgment. And I think that's so important because, Paul Tudor Jones, one of the most famous hedge fund managers ever, said once that no man is as good as a machine, and no machine is as good as a man with a machine. And I definitely believe that. Like I said, I like structures that are either have finished wave 5s like this one, or that are in wave 5s. That's just me. Other people prefer third waves. When they do happen, they're absolute powerhouses. So I think that's all I really wanted to touch on today. There's a small news announcement I'd like to make at the end here, which is if you go to the news section here on ewaves.com, you'll see I say intraday updates are now available. Now, these are not intraday granularity. In other words, you're not going to get hourly bars, although we are working on that. I need to upgrade my server. I really ideally want to do 50,000 plus markets every half-hour bar, but it's going to take a lot of processing and internet speed to make that happen. But in the meantime, as I make these improvements, I'm releasing them as fast as I can. So we do a 4x a day update now. That's really important because sometimes right after the open, the market can gap quite a bit from yesterday's close, and you really want to double check that wave count. And so, now you have the ability to check that. And for people who like to do, who are very active prior to the close, there's a 2:30 update as well. So I just kind of made it every 2 hours for now. And kind of, like I said, the roadmap after this is to start doing higher granularity, probably starting with 2-hour bars, then 1 hour, and then my final goal would be half-hour bars. Now, we don't just cover the United States. If you go over here to eWaves Live, you can read more about it. And at the bottom, we have different packages on the individual investor side. And for example, we have a crypto package. This has about 500 crypto coins in it. We cover different regions around the world, such as Australia, India, and so on. So I invite you to definitely come take a look at what we offer. So if you found any of this content interesting, please like and subscribe. You can go to ewaves.com to read more. I've got some videos there. We're going to post this on ewaves.com. And I'm hoping to do a lot more videos going forward. I want to cover markets such as this, talk about trading, talk about Elliott wave analysis, talk about the software. I would also love to do some deep dive technical videos. I don't know if anyone is interested in that. Probably not, but let me know down in the comments just to give you an idea. Like if we pull up the trend channel, just as an example, how do you represent a trend channel like this from a mathematical point of view? Okay, there are lots of different ways of doing it. And y equals mx plus b is not a good way to do it. A very, very bad way. That's the way they teach you to do lines in school, and it's absolutely the worst way to do lines. For a lot of reasons that I won't go into now, I use something that's very near and dear to my heart called geometric algebra that I truly believe should have taken over the whole mathematical world by now, but hasn't. The way it allows you to express things such as trend channels is so unbelievably mathematically elegant that I could definitely do a video on that. But maybe you guys aren't so interested in that kind of thing. That's the stuff that I think about all day long. I'm not necessarily just here to punt the S&P all day, but I do enjoy that as well. So just let me know about that, and I'll talk to you guys again soon.